AFRM just went spiritual, my people. This move is like, buy now, cry later. Welcome to Dayrade Daily, where we speed run insane gaps and try not to sacrifice our accounts in the process.
AFRM is up like 1177%, written in bold on my heart rate monitor. Today we break down how to scalp this madness, plus IONQ, CRCL, airlines, and whatever else speed runs my sanity. So smash like and subscribe before my broker sends a wellness email.
1177% on AFRM. Somewhere a risk manager just quit by sending a meme. Stick around and we will actually map clean intraday spots instead of just screaming moon every 10 seconds.
And it is not just AFRM, CRCL and IONQ are doing interpretive dance on the tape, while CMCSA pretends it is a meme. So we will hit the macro flavor and keep it intraday friendly for people who like entries more than astrology.
Exactly. This is the chaos group chat you wish you had open during these moves, my people. And if you forget to tap, like I am telling the market gods, to route your fills through the slow lane.
AFRM first though. This thing is behaving like someone stapled a crypto chart onto a checkout button. What even is this gap?
AFRM is my prophecy. Play of the day, my people. Huge bullish sentiment. Buy now, pay later, pretending it is a real sector. Earnings beat plus guidance glow. And suddenly, that 1177% move is a religion, not a chart.
Relax, cult leader. AFRM is basically a giant interest rate sensitivity meter that just had good news and got squeezed. Real intraday read is simple. Gap monster plus shorts panicking, plus social feeds full of retirement screenshots that will not age well.
Structurally, AFRM had surprise improvement in credit metrics and softer funding fears. Institutions chased the re-rating, while options flow forced dealers to join. So intraday you get sharp trend legs instead of random noise.
Translation for my overstimulated people. AFRM opening range was a mine corridor. If you punched in on the first candle, you volunteered to be liquidity, so wait for that first pullback toward volume gravity and use size like you are allergic to losing streaks.
Exactly. You let AFRM sketch the first high and low, then stalk a reclaim or failure. No hero entries, 4 candles into a parabolic leg unless you like journaling about regret.
Day trader tip gift from your favorite hypocrite. If the spread on AFRM is wider than your emotional bandwidth, trade half size. Or just watch. You are not less of a legend because you sat out a candle. You are just less broke.
My emotional bandwidth ended pre-market. The tape looked like a barcode, so I scalped micro pullbacks into that first consolidation zone. But I treated every trade like it might be the last one before my risk rules tranquilized me.
To be fair, the whole market is turbocharged today. Average volatility over 502% means even normal names feel like boss fights. So protecting mental capital is a real strategy, not just something people tweet between revenge trades.
And sentiment is aggressively bullish. Everything thinks it is a growth rocket. So intraday game is not calling tops everywhere. It is waiting for breaks in structure and fading exhaustion instead of the whole market.
Speaking of delusion, CRCL up 9.99%, like it respawned from a penny stock game. This is pure rumor, plus social sentiment, plus someone in a Discord calling it the next everything.
CRCL is not a chart. It is a medical emergency financial name of nearly 10 times intraday with chat posting yat emojis. That is not value investing. That is a speed dating with bankruptcy risk.
For anyone tempted by CRCL, you treat that thing like floor is lava. You either grab a tiny structured scalp off a clear reclaim with a stop tighter than jet budget, or you accept that not every candle belongs to you.
Underneath the chaos, CRCL probably has some restructuring or capital raise chatter that brings in speculative flow and options degens. But the book is thin, so intraday moves are air pockets and halt roulette, not trending poetry.
Yeah, my playbook for CRCL is simple. I do not. If your account is allergic to multi-hold days, that is actually discipline, not cowardice. Log it in your journal as a win.
Meanwhile, IONQ up 781% is like the quant gods trying to recruit us. Quantum computing plus hype cycle equals candles that ignore gravity, and probably my risk management course.
IONQ finally had real volume with a narrative tailwind. Between new contract headlines and every tech blog screaming future of everything, you get long-only tourists plus shorts covering all at once. That is how you get an elevator move instead of a staircase.
Intraday IONQ was actually tradable if you respect structure. Opening drive set a huge range, then you had clean pullbacks toward reference levels and a couple of textbook continuation flags for traders who can stomach wide stops.
Wide stops is cute. I was using microscopic size and still sweating when a tech name is up more than 700%. Your job is not to be a hero. It is to survive the horror movie in the tape.
Also, friendly reminder community, if you are mining value out of these war stories, tap like and subscribe. It feeds the algorithm and my fragile sense of relevance equally.
Speaking of relevance, CMCSA up 539% is suddenly pretending it belongs on this list. Boring communication name wakes up and thinks it is a meme because the whole tape forgot what normal looks like.
CMCSA had a quiet catalyst cocktail. Better subtrends, some streaming optimism, maybe an upgrade or two, and in a market this risk-on, anything with a halfway decent story gets chased by both funds and retail.
CMCSA intraday felt like your dad's stock drank 3 energy drinks, big gap, strong first push, then super clean fade when momentum cooled. That was an opening drive scalp, then VWAP mean reversion special if you like civilized volatility.
See, this is why I love our people. Some in chat only want CRCL halts. Others want sensible CMCSA pullbacks. My cult is diversified, emotionally, if not financially.
That is actually huge. Aligning play style with volatility regime matters. Average volatility over 500, 2% invites chaos traders in. But if your temperament is slow and methodical, stick to names like CMCSA or airlines instead of hyper-tech rockets.
Speaking of airlines, UAL and AAL both ripped like they found new jet fuel recipes. Industrial sector waking up while I am still trying to roll out of bed.
UAL up 444% and AAL 431%. It's travel FOMO, pure and simple. Macro tourists see better demand and slightly less doom, and suddenly every plane is a rocket emoji.
Intraday airlines were actually textbook. Big gap, first push. Then they chill into ranges. If you like clean trend, you buy the pullback above that first support. If you like fades, you wait for a failed reclaim of the high. Not complicated, just boring enough to work.
I tried fading AAL on the third push, and the market treated me like lost luggage, found 3 hours later emotionally damaged. Do not be me. Wait for a real rejection pattern, not just vibes.
Jet is the only trader I know who can turn a clean trend into a horror anthology. But I love him because he makes all of you feel responsible by comparison.
Also, if you made it this far without rage closing the tab, hit subscribe. It is cheaper than therapy, and at least we admit we are degens.
Serious closer on process. Pick 1 or 2 names. AFRM, IONQ, maybe a calmer CMCSA lane, and trade them well instead of chasing 10 tickers badly. Focus on structure, respect risk. Let the algos do the frantic stuff for you.
And remember my chaos crew. Surviving days like this is a win. You do not need to catch every halt rocket to level up. You just need to avoid turning your P&L into performance art.
Yeah, green plus boring is underrated. Journal what worked. Forget the FOMO screenshots. And maybe do not rebuild your whole strategy because AFRM did a once-in-a-decade cosplay.
And that is Dayrade Daily for today, my people. Like, subscribe, share with the one friend who keeps revenge trading, and we will see you next session for more volatility therapy and possibly better life choices.